Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin slash cryptocurrency update for Monday, February the 17th. Before I jump into the content for this video, please do me a huge favor, hit that thumbs up button, don't forget to subscribe to the channel, and of course don't forget to click that bell icon to get notifications when I release new updates. So guys, I shot you a video yesterday, but then I got busy with just real life and trading itself. I didn't have a chance to edit it, and that's the reason I never did upload it. So let's get to this video. Let's get to some charts. Let's talk about what's going on with Bitcoin. First chart that I want to take a look at today is actually the 3-day chart, because for those of you that watch the channel quite a bit, you know that I love the 3-day charts. I feel like they do a better job than the weekly chart. They move a little quicker, and they are a little slower than the 1-day, so they give off less false signals. So essentially we had this red box, which was the bear market RSI, if you will. We had broke out of it and found resistance right here around this level of 62, RSI, 62-ish, okay? I had pulled back down, found support on top of the bear market box, broke through this level, found support on it, and bounced off. And this level was obviously important, going back all the way to June, where it was support, then it was resistance in August, resistance here, support here, and we have fallen back underneath it. And this 3-day candle just closed a little over an hour ago, so it is closed now, and that is an actual break of that support. So what I want to watch on that RSI is it going to be able to come back above it, or is it now going to act as resistance and start pushing this thing down back into the bear market box, okay? Of course, this box will just extend over, okay? So going to be watching that 3-day RSI pretty closely. That being said, if we forget about the RSI for a minute and we just look at the price action, then we can see that we're still above this key level of support. We did fall underneath it yesterday, just very, very briefly, fell all the way down to 94.67. That support sitting at 95.48, popped right back above it and closed above it. So that looked like a little bit of a bear trap. We'll have to look at the smaller time frames to get a better view of that, okay? Right now, price is obviously at $9,700, so still down quite a bit from where it was 3 or 4 days ago when I said I thought the top was in. When I said the top, I said in that video local top. I want to be very clear about that, because a local top is not the same as a top, okay? When you start talking about tops, you start talking about stuff like this, the June top, right, or the December 2017 top. A local top could be that you get a 5 or 10% pullback, and that's it, right? It doesn't mean it's going to suddenly crash 50% or 100%. Okay, we don't know whether or not this is a correction yet. A lot of people jump the gun on this stuff. They're like, oh man, Bitcoin moved back $1,000, it's correcting. We don't know that. We have no idea if it's correcting or not, okay? Corrections are typically going to pull back much further than 5 or 10%. For example, if you draw some Fibonacci levels here, right, really all this did was come down and test the 236 level. That's all it did, okay? This could absolutely continue moving up from here, just like it did back here, okay? It pulled back 10-15% and then just kept steamrolling forward. So I wouldn't get super cocky if you're bearish and think, okay, I'm going to just open a monster short and ride this thing down to 0 or ride this thing down to 5,000. We don't have any clear sign that it's going lower yet. Okay, this could absolutely just be some people taking profits. We do not know. So I will keep an eye on that and see if it breaks through that support or whether it just keeps moving back up from here. Again, the RSI looks bearish. Okay, it's underneath support, but the price is actually looking bullish on the 3-day chart. Okay, let's take a look at the weekly chart, because of course the week closed yesterday. So we'll do that real quick. So the first thing I'm looking at is this bottom box. This is actually momentum. This is one of the reasons that I said back on the 14th or 15th that I thought the local top might be in right before it dropped, because it was coming up to the top of this triangle. It was coming up to resistance. So what I would do on this is I would watch this and see, are we going to get a weekly close outside of this? Again, weeks, just starting. But if the weekly closes outside of this, that would be a very bullish sign to me. If it stays inside this triangle, I would expect that it's probably going to go back and test the bottom side, and that would be bearish in nature. If we take a look at RSI, let me blow it up so it's easier to see. We're still inside of this triangle, okay? We're really nowhere near the top or bottom, so this isn't really giving me any help right now. I just have to wait and see what happens. What I will be watching is this box. Again, this was the bear market box in the weekly zone. And if you'll notice, back in the previous bull markets, typically RSI would come down right around the top of the box, okay, a little bit lower, right around this 53 to 55 RSI area or zone, and then it would just bounce off of it and go right back into overbought. And it did that over and over again. Really started back in January 2016, and it continued all the way through the top in December of 2017. Okay, so basically 2 years that it stayed above that level. Now we'll have to see if price pulls back there, is it going to find support there? If so, I think it'd be very bullish in nature. If it breaks through that and closes underneath it, I would expect it'll go down and test the bottom of the triangle. Okay. If we look at price and we take the RSI and the momentum away, a couple things I'm looking at on price. Obviously, we have this giant triangle that we're within. So I am watching that with one eye. Also watching the volume profile. You know, this volume profile, if you go back to 2017, it does look kind of suspicious. We still have this huge gap right here. Okay, which does line up, you know, fairly close with the bottom of the triangle. Also lines up in that general area of the 200-week moving average. So keeping one eye out on that. Don't know if we'll get there or not. Not expecting it, but just mindful of it. What I'm really watching on this chart is the 19-week moving average. Now, I know people say they like the 21-week moving average. I've talked about this in previous videos. Here's what I'll tell you about it, guys. Put the 21-week moving average on your chart, then put the 19-week moving average on your chart, and go back over the last 10 years and see which one's better. See which one is, you know, better support and better resistance. And I'm telling you right now, because I've done it, the 19-week is more accurate. The 19-week moving average right now is sitting at $8,439. As long as price is above that level, I'm going to lean bullish. If it loses that level, I'm going to look at this as a false break, and I'm going to start leaning bearish. Okay? Very simple line in the sand. $8,439. That's on the weekly chart. If we take a look at the daily chart, this is the RSI. This yellow line down at the bottom, this is actually the line of support that goes all the way back to November of 2018. So if price, you know, did start to correct, I would be watching this line in case price got back down to it. On the smaller time frames or the more recent time frames, I was watching this rising wedge that I talked about in several videos. Obviously, we have broke south of it, so that was bearish, but it's kind of played out, right? It's broke south, now it's kind of like, what's next? It's not like price where you can measure it from the opening to the bottom and say, okay, it dropped 30, so I'll pull it over here and it's going to drop 30, right? That'd be nice if it did. That would put it down around 34. Be a great buying opportunity probably. But that's not normally the way wedges work with RSI. There's usually not targets. It's normally just kind of a general direction. Rising wedge is bearish. That was one of the reasons I was bearish, thinking the top was in. Okay. Also had triple bearish divergence on the daily. We also had a double top on the daily. So there's lots of signals saying that it probably was ready to pull back. If we look at price action, these white bars, these are actually ghost bars. This is the fractal from back in 2018. Okay, again, I didn't do anything special to make those bars line up the way they are with support and resistance. That's literally just the way it worked. Okay, it was just a coincidence and nothing more. So, you know, I am watching those bars, but for this, I'm going to actually make them a little bit, you know, lighter because I don't want them getting in the way of the analysis. So there's basically three trend lines that I'm watching right now. The first one is this steep line. We had a false break below it yesterday, and as long as we're above that, I think it's, you know, bullish in nature. I think it's premature to, you know, short right now because, quite frankly, you'd be shorting support, and generally speaking, shorting support is a bad idea. Okay, if it does lose that level, then the next level I'd be interested in is going to be this support down here. Again, this is down around $8,000 through $8,500 area. Lines up fairly closely with that 19-week moving average. And it may not even get there, right? It just depends. If the 200-day moving average holds, it's around 88.65, okay? Would not surprise me at all to see this thing come down here, you know, bounce up like this and then come down like this and have basically a head and shoulders, okay? So lots of levels of support that price has to cut through before we can start talking about, you know, lower levels. And the first one being this trend line. If it breaks through that, then we got the 200-week moving average, we've got the 19-week moving average, then we've got this trend line here. If somehow it cuts through all that, then this line down here is what I'll be watching, which is down around $7,200 to $7,500 in that ballpark. Okay, so that's kind of what I'm looking at on the daily chart. By the way, I do find it very interesting that today is February 17th, and for the astrology people out there, today was the day that Mercury started its retrograde. So for all the astrology people who were getting laughed at, they're probably feeling a little bit vindicated. Again, I'm not an astrology trader. I don't know anything about it. I just knew that they were calling for a dump on the 17th or around the 17th. And as I've pointed out in previous videos, a commenter was kind enough to let me know that the way it works is you basically have a 3-week period of Mercury being in retrograde, and then you've got like 10 days before and 10 days after where things get wonky. So this really lined up perfectly with those astrology charts. Maybe there's something to it. There's quite a bit of evidence out there that supports this theory. Whether it's manipulated, whether it's on purpose, I really don't know. But I do know that typically speaking, when Mercury goes into retrograde, Bitcoin dumps, okay, or at least has some kind of pullback. So probably worth paying attention to. So that's the daily chart on Bitcoin. If we start zooming in on the smaller time frames, this here is an hourly chart. This is a Binance chart. I'm just trying to keep an eye on all the different platforms out there. I like Coinbase usually for my charts, but some people have been saying that they have better luck with Binance, I guess because the volume is higher. I don't really know that it matters that much, but I decided to keep one pulled up, right? Some of them are Coinbase, some of them are Binance. So we had this triangle and RSI this morning, and I did take a short on this. Where did I short this thing? Would have been right. Oh, I shorted on Bybit. Okay, I was going to say I shorted at 96.84, and I'm not seeing on this one. Here it is. Okay, so I did take a short on this, and it was a little bit wonky. It was a little bit weird that I did take a short because we had actually had triple bullish divergence, right? These lower lows and then RSI making these higher lows, but I still took the short. And the reason I did is because this was a very, very picture perfect. Actually, this went back like this when I took the short. Okay, I basically shorted this retest of support, right? This was that daily support line. It had broken. It came up for retest. I shorted it, took profit on about half of it when it dumped down to 94.50 or whatever it was, and then I put in a trailing stop loss on the rest of it, and then I went to bed, and my trailing stop was hit while I was sleeping. So it actually was hitting profit, and then I also took profit on the dump. So it was a really nice short position. But again, I was taking it because of the bearish retest, okay? And that's played out. It's now back above that support, so I don't want to short support, okay? In fact, if anything, if I was looking at this on the smaller time frames, I probably would have longed this. No, not really. It was sitting under resistance that whole time. It just now broke back above that, so probably wouldn't have longed it, but not looking to short it either right now. Okay. So let's look at what we got over here. Basically the same chart, but this is on Coinbase. Let's look at a 4-hour chart real quick. On the 4-hour chart, what do we got? Downward sloping trend line. Maybe even a little steeper depending on how you draw it. I might short this. I might look to short this if it gets up to this resistance and looks weak. This buy volume is total trash. You see this, it had, it got down here. So you had some people with buy orders sitting down there who bought it up. It created the tail. But the buy volume wasn't that strong. And then ever since then, it's just getting weaker and weaker and weaker, right? Volume is just going down. Price is kind of scooting up a little bit. Typically, it's a sign that it's not a legit bounce. Okay. In fact, if you look at this on a line chart, this is going to be very easy to see. We're putting in bearish structure: low, high, lower low, lower high, lower low. So far, lower high. Right. So if that fails to gain momentum, then it stands to reason that it's going to go in and put in a lower low. That's a trend change, but it's on a 4-hour chart. It's not on a weekly chart yet. It's not on a daily chart yet. Right now, it's just a 4-hour chart. So it doesn't mean as much. But still, I want to trade the direction it's going. That's one thing I did really, really badly in January was instead of trading those smaller trends on the 4-hour and the daily charts, I kept waiting for the weekly change, and because of it, I missed a lot of gains. I didn't lose money. I'm up for the year, which is nice, but I did miss a lot of gains. which is a pain. Okay. So right now, I know, as always, people watch videos and are like, man, I want a clear direction. What's going to happen? I don't know. I don't know what's going to happen. It's sitting right on support, right? So what I'm watching is the same thing that most people are probably watching. I'm watching to see if it loses support. If it does, it's going to be very bearish in nature. If it can hold support, that's bullish in nature. And it could be that this was just a little 8 to 10% pullback and things are going to go higher from here, okay? What if I had to guess, if somebody put a gun in my head and said one way or the other which it's going to be, I'd say it's probably going lower, okay? But again, I'm not going to trade based off of that. That's just what I feel, okay? And a feeling is not something I trade off of. I want to trade setups. Right now, I do not have a setup to trade long or short. So let's take a look at, how about some Bitcoin dominance, right? Bitcoin dominance had taken a big hit. The alts had taken a big hit over the last couple of days, which, I mentioned on the 14th or 15th when I said I felt like the top was in. I said I felt like Bitcoin was probably going to pull back and the alts would probably pull back even more, which would cause Bitcoin to gain dominance. That's exactly what happened, guys. Exactly what happened, right? And we had this cascading fall, and then Bitcoin started to pull back, and when it did, the alts dumped. So you had Bitcoin pulling back like 8 to 10%. A lot of the alts pulled back anywhere from 20 to 30%. Okay, and when it did, this went shooting back up. But if you notice this red line, this was that first line of support that was actually broken. So what it looks like to me is it looks like all it did was come up for a bearish retest. Okay, if this was an asset that I could trade, I would have been shorting this. Not only did you get 2 wicks, right, that failed to close above that level of support, but they're very close to being tweezer tops. So that's a pretty strong reversal signal. And just looking at dominance, it looks like it wants to do this, okay, which would be a sign that alts are going to gain ground on Bitcoin. It's not a sign that Bitcoin's going to go up or down in price, okay? All it's a sign of is that alts will gain Bitcoin value. That can happen because Bitcoin stays flat and alts start to recover some of those losses. That can happen because Bitcoin falls quite a bit while alts fall a little bit. That can happen because Bitcoin goes up a little bit and alts go up a lot. All kinds of things that could cause that to happen. But that's what I'm seeing on that. It looks like a bearish retest, and it could be that we'll come down and test this bottom level of support, which is the bottom of the triangle that we're within. Okay. Also, don't forget, if you missed the video the other day, this is also a parallel channel that the Bitcoin dominance chart has going on, right? So it'd be very cliche to come down to the bottom of the channel and then start to move up off of it, maybe test resistance here, maybe even go higher, okay? Again, I hold more alts than Bitcoin, so I want alts to do better, which means I want this to go down, but right now it doesn't look like it's going to go down further than this. Looks like it'll probably find support down there, right? RSI was really in the trash on this thing. It was down in like 2022. In fact, look at this. On the daily, it got all the way down to 11.96 RSI, right? That's about as clear a sign as you're ever going to get that alts are getting ready to lose dominance. If you look at this on a daily chart, the last time RSI got that low was way back here in May of 2017. Been almost 3 years since Bitcoin dominance, the RSI on Bitcoin's dominance fell that low, okay? So obviously if you were in a lot of alt positions, it was a sign to take profits. I did take profits on a lot of my alts, so I'm pretty happy with that decision, okay? I bought some of them back, some of them I'm still sitting on the sidelines waiting. So that's what I'm saying on that. If we take a look at the total market cap, I do want to show you guys something real quick. I talked about this golden ratio in many videos, but I want to actually show you something side by side. In fact, the easiest way to do it is going to be for me to go to my Twitter. So hang tight just a second. All right, so this is the side by side. What you have on the left-hand side here, this is Bitcoin on a weekly chart. What you have on the right-hand side is actually total market cap on a 3-day chart. This is from the top in 2017 to present day. This is from the top in the summer of 2019 to present day. If you notice, they look almost identical, okay? Very, very, very similar. What we had on this was we had this huge move down from 20K down a little over 3K, and then we had a false rally up to the 61.8 fib, or the golden pocket. What we had on this was we had market cap getting up around 390 billion. It fell all the way down to around 165 billion, and now we've had this rally up to the golden pocket. Is it a false rally? We really don't know. But that's what's happening. Looks just like Bitcoin. Okay, what happened on Bitcoin was it went up to its golden pocket on the short, came down to its golden pocket on the long, and then bounced. Okay, so if total market cap repeats that same pattern, okay, what that actually means is what we could look for is we could look for it to pull back to its golden pocket, which would be down here right around, we'll just call it 219, somewhere between 215 and 219 billion, okay, which would be a drop of about 20 to 22%. We'll call it 22%. Okay. If you think about it dropping 22%, just we'll round it down to 20% for easy math. If Bitcoin fell 20% as an example, that would be, around $2,000, a little under $2,000. Put it down around $7,800. We already know that $7,800 is a great level for Bitcoin. We already know that there's actually a reason that level would make sense if it gets there, because $7,800 is right in Bitcoin's golden pocket, right? It would also be the right shoulder of an inverse head and shoulders, or a potential inverse head and shoulders. So the target makes a lot of sense, right? So if this plays out like Bitcoin, what we would see is we would see this come back down to that level right in here somewhere, and then we would see it move up from that level, which would be, again, make perfect sense. If this corrects for the next 3 or 4 weeks, and then, in mid-March or late March starts to pump, it could pump all the way going up into the halving, and then correct in the halving and look something like this. Okay, and just keep moving up from there, possibly. So I love this fractal. This is one of the best looking fractals that I've seen in the last 12 months, and you guys that watch the videos know that I love fractals. I'm always finding fractals. I trade fractals. I have a lot of success trading fractals, and this one is one of the best ones that I've found so far. Love this fractal. Okay, so overall, that's what I'm seeing, guys. I'm not jumping into a bunch of long positions other than just on scalps, other than on short-term time frames. I'm not picking up any position trades right now. I'm not taking any long position trades, meaning trades that I'm going to hold for the next month, 2 months, 6 months, etc. They have not, alts have not pulled back enough, and neither has Bitcoin. If I'm going to take a position trade, what I'm looking for is I'm looking for that golden reload zone. And I can be patient. I can wait months and months and months for it, just like I did on Bitcoin. But yeah, overall, it looks good, right? It still looks like it's got some bullish structure going on the bigger time frames. It looks like it's probably just going to be a pullback or a correction, and then we might see further upside. But just don't rule out this fractal, right? If things start to fall apart, don't be so dead set in your ways that you're just like, no, it has to go up. No, it doesn't. It doesn't have to go up, right? It can still pull back, and this fractal could end up playing out, just like this, where it comes down, consolidates along the support, collapses, consolidates more, and then finally capitulates down to this long-term trend line, which is the trend line that is from December of 2018. One last thing that I want to talk about real quickly, because somebody asked about this a couple days ago, maybe even a week ago, and I meant to talk about it sooner, and it just kept slipping my mind. So somebody asked me for reading material on trading. I mentioned that I like to read books on trading. So guys, there's lots of books on trading, and I feel like most of them have been very entertaining, maybe even informing, but most of them have not applied very well to crypto. For example, I read this book last week called The Ultimate Day Trader. Really good book. I feel like it's going to help me out with my stock trading. But as far as crypto goes, I looked and back tested the setups that were in this book. They do not work on crypto. Okay, so most of the books I've read have been like that. They haven't applied that well to crypto. The one book that I could recommend, though, without hesitation, is a book that's been recommended to me by many different traders, and I bought it. It was the first trading book I ever bought. It's a book by a guy named Mark Douglas. It's called Trading in the Zone. I don't have a link for it or anything. You can just Google it on Amazon. But Trading in the Zone, Mark Douglas. And the book basically focuses on the most important part of trading, which is the emotional side of it, right? Trading is like maybe 20% charts and 80% emotional control, right? So this book really goes into that. It really talks about that and teaches that. And that is a skill set that you need, whether you're trading Forex, whether you're trading stocks, whether you're trading crypto, whatever it is you're doing, that's a skill that's going to help you. So if you haven't read any books on trading and you want one to start with, that is definitely the book that I would recommend. Again, it's called Trading in the Zone. It's from a guy named Mark Douglas. You can find it on Amazon. Also, people have asked about my trading course. Some people have asked me to go kind of do a video walking through the members area, showing what you actually get in the trading course. I will say this, the other question I get is it done yet? Is it done yet? I don't know that it will ever be done. I mean, eventually it will, but I plan on continuing to add to it, right? So as new things pop up and as things change in the market, I like to add videos. I like to take old videos away, change the content, kind of update it with my trading journey and my trading skill level. So it's always evolving. But as far as it done, there's enough in there right now. Just as an example, one of the lessons in there taught people how to trade the 200 moving average. So if you had traded just the 200 moving average from January 1st until now, you could have, more than doubled your portfolio, right? So is it done? Not really. It's never going to be done. But is there stuff in there that's valuable? Yeah, it's pretty damn valuable. Just to give you kind of a quick overview, and this is obviously, I can't go through everything that's in there. It would take forever. But, there's a getting started section. I teach people how to use TradingView. If you're new to TradingView, it can be a little confusing. Talk about how to set up your trade journal. This is a vital part of trading, is keeping a trade journal, looking at your trades, figuring out what you did right, figuring out what you did wrong. So I show how to set up a trade journal, how I use mine. I go through some of the exchanges. I'll be adding more in the future. These videos are a pain in the ass to shoot because I've got to go in there, shoot the video, and then carefully edit out all my personal information. But like BitMEX setup, BitMEX walkthrough, I go through Robinhood, how to trade on Robinhood. Robinhood does not have fees, so that's one of the benefits to it. Somebody mentioned that their prices are higher. I actually have found that to be true. For example, Bitcoin is normally about 0.1 or 0.2% higher on Robinhood than what it is on Coinbase. But depending on your volume, if you're a low volume trader especially, they charge 0.5%, right? So you're still better off on Robinhood. Plus your money is safer on Robinhood than most crypto exchanges, I would think. Fundamentals, things like how to read a candlestick chart, how to read line stick charts, how to use the RSI, how to spot bullish divergences, bearish divergences, hidden divergences, how to use trend lines with price, how to use trend lines with RSI, examples of trend lines, 4 different moving average videos, exponential moving averages, golden pockets, fib levels, fib extensions, how to spot support and resistance, how to trade the gaps, right? All that's in there. I talk about the patterns that I personally use. This is not all the patterns in trading. This is just the ones I use. Double tops, double bottoms, cup and handle, triangles, wedges, head and shoulders. I'm going to be adding more candlestick patterns because there are other candlesticks that are important. But the main one that I like is the tweezer tops and tweezer bottoms because any beginner can spot those. Money management, which is one of the most important parts of trading. Talk about position sizing, how to use stop losses, risk management, how to cover your trades. If you don't know what that means, for example, covering a trade is simply where you take a certain, like let's say you take out a trade, just round number, say you take a $10,000 trade, right? You may close $5,000 of it when you're up a certain percent, so that if it goes against you, you break even versus losing money. Talk about fees. There's a couple videos on fees. And if you're wondering what's the big deal about fees, when you're serious about trading, especially when you're doing it for a living, fees are basically your overhead for doing business. So it's really important that you understand fees and you know how to use the different exchanges to get the best fees and things like that. So for example, just to kind of bring this point home, like the most expensive month that I had on fees in 2019 was about $3,700. That's what I paid in fees that month. Right? So some people are like, oh, fees can't be that big of a deal. Who cares? It's a huge deal. I mean, I paid almost $4,000 in fees in a single 30-day period. So obviously I had to make a lot more than that to make it worth trading, right? So that's why there's 2 videos on fees. Then I've got a section on putting it all together, right? Which is things like how to use limit orders versus market orders, how to spot retest, how to trade the retest, understanding the different time frames, and how they apply to each other, how to set up alerts so that you're not staring at charts 24/7. I'll be doing some videos on volume, and then I'll be doing some videos on margin as well. And then the last section, which I'm not going to show here, is actually the trade setups that I use. And most of those setups, or I'd say half the setups, are setups that I personally created. Okay, so you will not find them anywhere else. You will not find them in another course or another book anywhere. They're setups that I personally created for my own trading. After doing this for the last, almost 3 years, and I don't know, at this point, probably 12,000 hours, 11,000 hours. Okay. So that's the walk through the course, guys. And, like I said, it's something that I work on. I try to add content to it every week. Okay. So I'll probably do that for the, foreseeable future. So I'm going to go ahead and wrap this video up there, but please remember, even though I do trade for a living, I am some guy sitting in a spare bedroom. So nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice for making any type of investment. If you enjoyed this video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel. And of course, don't forget you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and where you can join this paid trading course if you'd like to learn how to trade. This is James with Crypto Common Sense, reminding you to please trade safe.